So as I was just saying, I like to start these calls with a little bit of personal development stuff, and a couple of reasons for that. For you guys that have been on the calls before already, you'll know that I've spoken a little bit about my journey with personal development. Started around about 2012, and I've come across a variety of mentors, if you like, who have really helped me just become a better person and get a better understanding about myself. I think is probably fair to say, but also give me a different perspective on many things in life, in particular what success looks like. So I'm going to share with you tonight a guy called Bob Proctor. So Bob Proctor was actually the mentor for a previous company that I were involved in, which were based around trading. Actually, we're a trading academy, and Bob Proctor was the mentor for the entire company. So uh, he passed away not too long ago. But I'm going to share you a short bit on this, and then I'm gonna go into a little bit about the book he's specifically talking about. So I'll just play this clip for you.
Changed everything forever. This book changed everything for me. In this book, it's Napoleon Hill's Thinking Book. There's 15 chapters. There's one chapter, the entire chapter is dedicated to decision. Money is the easiest thing in the world to earn once you learn how. Now, if you turn making a decision into a habit, you're going to learn how to do a whole lot of things you may think you can't do. You see, we've got to take a look at the non-physical side of ourselves. When you change the way you look at something, what you look at will change. You change your perception. Change.
So, like I said, they're always going to be just little short clips that I like to share. Now, he talked about a book there. So I got this book I've got it here. And if you look at the bottom corner, Organo Gold. So that was a healthy coffee company I was involved in back in 2015. So I've had this book 10 years, 11 years. And as I went through the book, I started, you can probably see some of the highlighted pages, like where I was just highlighting bits what were really relevant or prominent to me and my way of thinking. And I've just dug the book back out because we're going traveling in a couple of months, and that's going to be coming with me. I'm going to be diving back into it. It's almost like the personal development Bible. So why am I talking about this? What's this got to do with trading? Well, trading, through my own experience, has got a huge the biggest part of the journey with trading is your mindset and your mentality, because it can be an emotional roller coaster. And some of you will be grinning or, grimacing because you'll have experienced exactly what I'm talking about. The ups and downs that come with trading can be from one extreme to the other, literally. Now, what I've tried to master, particularly this time round since I got started again in January, is mastering the emotional side of trading. And it's not an easy thing to do. And I'm not sitting here saying I've mastered it, I've cracked it, because I absolutely haven't. I still go on the roller coaster with the best of them. But what I feel like I've managed to get a handle of through personal development, through repetition, through listening to the right information, and through understanding that there is a process to go through to reach the big success with trading, is I've managed to balance out that emotion. So rather than it being up here on a high and through the floor on a low, the extremities, shall we say, of my emotions when trading now are far more balanced. So that's something that I would encourage you all to really try and master. And again, I'm not going to sit here and say it's easy, you should be able to do it, detach yourself from the outcomes, because I've not fully detached myself from the outcomes of the trading, whether it's win, lose, or whatever. It's still an emotional roller coaster for me. But what I'm saying is, I feel like I've managed to make the highs and lows, rather than being so extreme now, they're a bit more evenly balanced. So it doesn't hurt as much when I take a loss, and I don't get excited as much when I get a good win. By managing those emotions and getting them in check, it's going to be really, really beneficial to your mentality and to the journey that you're going to embark on, or that you're already on. So personal development will play a huge part in it, because it'll get you thinking about different things, about why are you actually doing this? What outcome are you looking for? Why is it important to you? And it'll just start probing your thoughts a little bit, and hopefully help you then bring them emotions into a bit more better balance, so that you can enjoy the journey a bit more and ultimately have more success. All right. So that's why I always start off with a little bit of personal development. And hopefully, whether you dive into it or you don't, it's up to you. But I will always drop a couple of little bits in because it has been such a big influence in my life, not just from a business standpoint, but from a personal standpoint as well. So I would highly recommend it to all of you, regardless of what stage of your life or your trading journey that you're in. So next up, I'm just going to go through some information about the community. So you may be a part of my community, which is Charlie's Trade House. You may be a part of somebody else's community. Ultimately, we're all in it together, regardless, anyway, which is fine. But I'm just going to share with you some stuff that I think is probably important, whether you're a brand new person or you're somebody that's been around for a little bit. And I really want to hammer home a few things that I know will help you in the pursuit of success with this. So before I do get into anything, just want to give you a disclaimer that I'm not a financial advisor and I'm not here to give you financial advice. I'm here to simply share experience with you and hopefully help you become successful or help you learn a little bit more about what we do and how you can make this a part of your life from a standpoint of making more money. Anything that I do discuss with you will not be directed as financial advice. So I just want to clear that up for you all before we get going. And what we do is or the primary asset that we trade is gold, and we do that on the Forex market. So gold, it's branded on the MetaTrader as XAU USD. All right, so that's what we are trading, gold versus the US dollar. So ultimately, what we're doing is we're following instruction from some experts who are giving us the guidance to take trades on gold versus the US dollar. Ultimately, I always think of it like this. It's almost like educated gambling. I think that's probably a fair way to put it. Because these guys who have studied the markets for years and years and years and become, millionaires, they are basically predicting how the market's going to behave, but we can never 100% predict it because obviously, if that were the case, everybody would be at it. But we have a high probability of succeeding within the markets by following these instructions because typically these guys operate at around about an 85% strike rate. All right, so we're executing the trades through our designated broker, which is Vantage, and one thing that you need to know for sure is that you are 100% in control of your own money all the time. There's no, oh, can you do that for me? There's none of that. You literally press buy, you press sell, you choose your lot size. I'm going to give you some guidance on all that tonight, but you are 100% in control of everything that you do with your money through this process. You don't have to take the trades. You can simply look at the information, and if you like what they're saying, you can take it, or you can withdraw your money at any time as well. So if you get started and you decide, actually, it's not really for me, I don't think I can get a hang of it or whatever, you can withdraw at any time. There's no stipulations to leave your money in. The only stipulation with being a part of our community is that you do use our broker and you go through the person that invited you to this information or share this information with you. You go through their referral link and then you will become a part of our community. The virtual assistants will help you get plugged into the community groups where you can start accessing all the information and the instruction. So the goal really is to compound our money. I read a book some years ago called The Compound Effect. And this is pretty much what we're looking to do with this, or this is certainly what I'm looking to do, is I'm looking to compound my money on a daily basis. And personally, I'm happy with 2 to 5% a day. And I don't know anywhere else where I could go and get that on my money. So my mentality towards this is rather than having money just sat there doing nothing, I'd rather put it in something that, is it risky? Yes, absolutely. Life's risky. As the great Jim Rohn says, none of us are getting out alive anyway. So taking risk is part of what we do. My personal target on a daily basis is 2 to 5%. All right. If I hit 5% on a daily basis, fantastic. I will stop for the day. On the flip side of that, if I lose 5%, because we will and can lose money doing this, let's be totally clear about that. If I were to lose 5% in any period throughout the day, I would immediately stop trading for that day. That's my personal rules. We're going to talk a little bit about more, bit more about that as we move forward. But the approach to this is to focus on the process and not just the digits on the screen, not just the pound signs. Think in terms of percentage growth rather than monetary growth. And the reason I say that is because what we get with this is there's no the minimum to start with is £300, but there's no maximum. You could deposit whatever you wanted to get started with. But what I've seen with this and what I've experienced myself is starting with small sized accounts is you've got to be way more patient. And I'm not saying that for any other reason than typically what I've found through this journey is people with smaller accounts are more susceptible to blowing their accounts than somebody with a larger account. And let me explain why I believe that is, because for a lot of us, we can't wrap our head around the percentage growth, especially if it looks like £15 or £20 a day. It's not as exciting as 50, 100, £200 a day. Now, if you were to achieve the numbers, 3 digits and higher on a daily basis, you're going to need a larger account to achieve that. So on a smaller account, you're going to need to be way more patient and disciplined because the monetary value growth is not maybe going to stimulate you or excite you as much as it would if you were on a bigger account and you were seeing bigger pound signs, so to speak. So this is where the approach should be focusing on the process and not just the digits on the screen. And then just trying to hit some steady gains on a daily basis. We're not high risk gambling, we're not over leveraging. Again, I'm going to cover some of this stuff as we go through the information tonight. But we've got to be patient, we've got to be disciplined, and we've got to have the mentality that we're not going to over leverage, we're not going to gamble, and we're going to respect the money that we've put into this, whether that be a big amount or a small amount or whatever it might be. We're going to respect it regardless and try and compound our money on a daily basis without gambling and getting drawn into that kind of stuff. And again, that's where the personal development stuff really comes into it and keeping your emotions in check. So there's no hype or egos. What I've found with this is when you do get too excited and your ego starts to get a bit big and you maybe want to take a bigger trade or leverage a bit more, that's typically when the market will pull your pants down and give your ass a real good slap. So don't get overexcited when you're on a winning streak, and don't get, again, this is easy to say. It's easy for me to say now. I'm getting a handle of it, but try not to get too disheartened when you have a couple of losses, because we've got to understand it. It's part of the process and it's part of the game. And if we treat it with respect and treat it as a professional business, so to speak, then you will get the better results further down the line as we get into it. And the reality of it is, the market will absolutely humble anybody that comes into this and just start throwing mud at the wall and hoping it's going to stick. So we're going to talk about rules tonight, which is really important. And then just being a bit professional about your approach as well. Don't get drawn into gambling. And I'm speaking about this and I'm saying this because I have been there. I have come in, in the past. I started actually back in 2020 with the whole trading thing. During COVID, I joined up with an academy. I was paying a monthly subscription of about 150 quid a month. I had some decent wins, and then I'd get clever and I'd start over leveraging and I would start gambling to some degree, and then I'd end up blowing an account. So all the information that I'm sharing with you tonight, and I'm going to share with you moving forward, is based on personal experience. It's not just me waffling and saying what you should be doing, and I'm giving you it from personal experience as well. All right, so we're not here to gamble, and we just want to follow the instructions that we've been given. And we also actually get access to a couple of high-end education calls throughout the week as well as part of the community, free, no cost. And we can sit and learn different strategies as well to maybe even start taking trades on our own. So these are some of the rules that I want to talk about, non-negotiables. It says our non-negotiables. These are my non-negotiables, and I won't say I try and enforce them onto people, because ultimately you're all adults. You're all here doing this at your own discretion. But I really try and hammer these home because I think they're so important. And I know, again, from personal experience, by implementing these rules and being pretty disciplined and strict, or not pretty, but being really strict and disciplined on them, the success that I've had, in particular in the last couple of months, has been fantastic. I tell the story, I think it was the back end of January or early February. I pulled up at a fuel station and a couple of trades came in. So before I got out of the car to start filling the car up, I got into this trade and we do something called layering. If you're not sure what that is, I'll drop a video into the Telegram afterwards, what tells you a little bit about layering and what it is. Basically, it's taking multiple entries into any one trade. So I took three trades, I took three entries into this one trade by layering in. So what that basically means is if price moves deeper into the zone and gives us more opportunity to get into the trade again, we can take it. I did that three times. What I did then, which was absolutely criminal and stupid and something I've never done since, I got out of the car, filled the car up, went into the shop, paid for the fuel, came back to the car, looked at my phone, and I was hundreds of pounds into the red because I'd not put a stop loss in. I'd not put the stop loss in, which is just absolutely criminal. And before I knew it, I was £700 out of pocket. And I learned a harsh mistake that day in the space of probably half an hour, lost about 700 quid. So that was a big slap in the face for me. So going back to the non-negotiables, my non-negotiables and my rules, I will never enter a trade now without placing a stop loss. So once I'm in the trade, the first thing I do, because we're taking instruction and signals what sometimes are time sensitive. So sometimes you literally have to go and press buy or sell and then immediately put in a stop loss. So that's the way I do it. I immediately put a stop loss in as soon as I've entered the trade. And I always go 100 pips from my entry. And then I'll go and see what information the trader has sent into the relevant group. And then I'll go back and make adjustments to my trade, modify the trade as I see necessary based on the instruction that's come. Sometimes it's a shorter stop loss, or well, most of the time it's a shorter stop loss than I put in. So never enter without a stop loss, guys. That's going to protect your capital at all costs. And if you're risking appropriate amounts for your account size, you're never going to get hurt too much either. So never taking a trade without a stop loss is so, so important. Rule number one for me. And then the second one is don't trade in a negative frame of mind. So if you're coming off the back of, I don't know, an argument or a bad day at work, or something's just gone wrong where your frame of mind is not great, don't trade. Put the app on mute until you know that your mindset is in a better place. Because what you'll find is if you're in a negative frame of mind anyway, and something doesn't quite go your way, you're going to be more susceptible to doing things that you shouldn't be doing, going against your rules, over leveraging, entering a trade what you probably shouldn't enter, entering off your own back rather than waiting for the instruction. So when we're in a negative frame of mind, it's probably very wise and highly recommended from my end in particular, and I don't do it if I'm in this kind of frame of mind. Just don't trade until you know you're back into a good mood, positive energy, and then things are going to be a little bit better for you. Once you hit your percentage growth for the day, stop. We don't need to chase. And another thing that I would highly recommend here is put the app on mute. So where the instruction comes through in that Telegram group, put it on mute and just get on with your day. Don't get greedy. Don't risk getting fear of missing out and jumping back into more trades, because again, that is typically when the market will say, thanks for coming back. Now I'm going to have you. So once you've got your percentage done for the day, just stop. And that goes the same from a loss standpoint. Because like I said, guys, there will be times where we're going to lose money because that's part of the game. And once you lose X amount per day, why would you carry on? And again, this is where the personal development, the managing your emotions, the mindset stuff is so, so important. Because once you get that discipline in order, the journey is going to be way better for you. And then just regarding getting started with us, this is what I love about this. There's no barriers to entry really. You can start with our community absolutely free. The only thing you've got to do is deposit with our broker. The broker takes care of us. So from a business standpoint, the broker takes care of us. You don't have to pay a subscription fee. There's no setup fee. But alongside of that, I must say there's no guarantees, and you want to be rule based. You want to go, if we just go back to that previous slide with them non-negotiables that I talk about there, you want to get some rules in place that are relevant to you. These are just my rules. You can use these as a bit of an inspiration or a bit of a guide and make your own rules on the back of it. You can copy these exactly. But once we have a rule-based strategy in terms of how we're going to approach the process, the success will come on the back of it via discipline and not just relying on luck and winging it. So that's all the information I want to share you on that with you on that side of things. Go back to the person, obviously, that invited you to the call if you are relatively new. But what I do want to do now is share also with you some information on some of the most important stuff, really. Let me just get the screen share up here, which is lot size, risk management, and things like that. So just bear with me a second. So some of you guys will know this already anyway, if you've been around for a while. But for the new people in particular, this refresher will be really handy for you. So we operate in something called pips. So the market moves. Just going back to gold, actually, it'd be better starting on this slide here. So the value that we see, in fact, let me do it this way. I'll open up the gold chart so we can have a look. So here's the gold chart. So XAU USD. So down the right hand side, this is more probably relevant for newer people or people that are looking to just get started with this. The price of gold is the number on the right hand side. So at the moment we are sat at 4676 that's US dollars. That's the current value of gold per ounce. 4676. And so every time the price of gold moves $1, that equates to 10 pips in the market movement. Now, when we are trading, just go back to the other screen now. When we are trading, we have something called a lot size. And the lot size is basically what you're going to be risking per trade. So if the price of gold was to move 10 pips, that's the equivalent of $1 on the value of gold. Now, when we look at pips in relation to that, if your lot size is a 0.01, and again, if you're new to this, guys, you'll see when you go onto your MetaTrader 5, you'll see the lot size in the middle of the screen, and it should be on 0.01 when you start anyway. But that 0.01 means you are risking 10 cents every time the market moves a pip. So if the market was to move 50 pips, i.e. $5 on the value, then that would equate on a 0.01, that would equate to $5 risk. So you know that if your stop loss is 50 pips, and you're on a 0.01, you know that you could potentially lose $5. And this is the most important thing about when you come to taking trades and your risk management, because when you understand the maths around the lot sizes and the risk amount and the value of the pips, then you know every time you enter a trade, you should know exactly or thereabouts what you're risking. So for example, if you are on a £500 account and you are on a 0.01, and you have let's call it a $500 account. Let's just work in dollars just for the sake of ease and numbers. If you're on a $500 account and you are on 0.01, you're risking, your stop loss is 50 pips. Your stop loss is obviously going to protect you if price moves the wrong way. Then you know that you could potentially lose $5. So 1% of your account. Now you might think, well, actually, I wouldn't mind risking 2% per trade. So if that's the case on a 50 pip stop loss, you would be a 0.02 on a lot size. Now, if you're working off my theory or my style, where I always put 100 pip stop loss in, then in this case, you would be on a 0.01, risking 2% with 100 pips. don't want to overcomplicate it and get you too confused here. But if you were risking 100, if you had 100 pip stop loss, that would equate to $10 risk value on a 0.01. And obviously on a $500 account, that would be 2%. So once you get your head around the mathematics around lot size, pips, and the dollar amount that you want to risk, that's when you'll be onto a winner. Because I do honestly believe that a lot of people come into this without fully understanding the formula around that, around managing the risk. And once you've cracked that, there should be absolutely no reason that you're blowing accounts. There should be no reason for it. Unless you're gambling, you're not placing a stop loss, you're over leveraging, and you get on a couple of bad trades. There's no reason why you should be getting whacked and blowing your accounts. So everything I've talked about tonight, guys, from the personal development side to the lot size, the risk management side, it all ties in together, because the personal development side is going to help with your mindset and your mentality and your approach. And then understanding the process of the pips, the stop loss, how much you're willing to lose per trade, because that's what we've got to have, that mentality. How much am I willing to lose on this trade? Because that's what can happen. And if you're willing to lose 1 to 2%, which I think is a sensible amount, then you should know, based on your account size, account balance, and the pips that you're going to have as your stop loss, you should be able to work that number out, and then you're good to go. If you can't figure this out yet, the digits and the risk management stuff, reach out to me personally, because I know for certain that people who have come into this and blown accounts, quite often they simply haven't worked out that equation of the pips, the risk management, and the lot sizes. And once you've cracked that, there's no reason you should be blowing accounts unless you're gambling or not putting your stop losses in, or being a bit silly. All right, guys. So that's really important stuff to know. Other than that, I've got nothing else for you tonight, guys. I like to keep it around about half an hour. We're about there now. What I do want to promote is we've got an event that's happening at the Royal Armouries in Leeds. Let me just pull this up for you actually and drop it in the chat. Because again, if you're somebody that's serious about elevating, your game with the whole trading thing, then this is going to be really beneficial for you guys, because you're going to get around some serious people who have been in the game a lot longer than I have and had way more success than I have, and they're going to be sharing valuable information for you. Let me just see if I can pull up this link for you now, and I'll drop it in the chat, and then you've got it. And by the way, if you are brand new and you've not got started with this yet, then I will also, here we go. I will also be more than happy to sit on a call with you one-to-one and take you through anything that you need taking through to make sure that you know what you're doing. Let me just drop this link in here. So here's the link, guys. So there's a link in there. I would highly recommend at least having a look at it. If you decide you're not coming, no problem, but definitely take a look at that with a view to coming along with us. All right, let's have a look at the chats. Stop loss from the signals is nearly always 130 pips. Right, okay, so again, that would depend on where you enter. So what I found is I will always work off 100 pip stop loss, personally. And I have seen them go, and I've actually seen the trader say he's moving the stop loss, and it can end up being an extended it can be end up being an extended stop loss, which means you're risking more pips. But the way I do it, in my mind, I think, right, 100 pips is going to be my maximum. So if I get into the trade 3 times with entry number 1 with 100 pip stop loss, then entry number 2 for me will be 20 pips into the zone. So then my next stop loss would only be 80 pips maximum. And then the final one, if I got into a third one, would be a 60 pip stop loss, because I still stay at whatever that initial 100 pip stop loss was. So I know on any one trade on my account personally, I'm risking a 0.1, which basically means I would be risking $240 per trade maximum. And based on my account size, I'm okay with that. And I know that that's the maximum that I would be risking on any one trade. So again, once you wrap your head around that, based on your account size and your risk management, your risk appetite, so to speak, then it will be a better journey for you rather than coming in a little bit unsure and just taking trades anyway. Because the last thing you want to do if you can avoid it, or the last thing I would hope for you guys if you can avoid it, is coming in and having to blow a couple of accounts before you get it. Because again, I've done it. And I've seen other people come in even now, and people will do moving forward. They'll still come in, they'll feel like they've got it, they won't quite got it, they won't have asked any questions, and they'll blow accounts. And that's just, ultimately that's just the way it goes. I can talk about it all day long and invite questions and one-to-one conversations all day long, but ultimately we're all human beings, aren't we? So but guys, I'm going to leave it there for tonight. If you've got any questions, give me a shout. If you haven't booked your ticket for the event, I would recommend purchasing it, or at least clicking the link what I've dropped in the chat box and have a look, and then go from there. Let me just see what Pete's asking before I wrap up. Right, here we go. If I did layout. So personally, what I do, Pete, is I just stay at the stop loss. If my 100 pip stop loss is um in need of being changed, I will go back to what they've put in the telegram and I will modify the stop loss. But personally, the stop loss for me will be the stop loss what the trader's given. I only put my 100 pip one in initially to protect me in case market moves quick. Then I will go and get the trader's stop loss and I'll put it in, and that will be the stop loss, whether I've got 1, 2, 3, or 4 trades running, 1, 2, 3, or 4 entries. That stop loss what the trader's given me will be the stop loss. But obviously, if you're layering in, then that basically means that market's moving in the wrong direction, which is fine because we often get given a zone to work within. So typically for me, if I can get 20 pips deeper into the zone, I'll take another entry. If it goes another 20 pips, I'll take another entry. So typically I'm running 3. Occasionally, very, very occasionally, I might get 4 entries. And if I do, I always try and go around about 20 pips. So we can never be bang on accurate with that because the market moves so quick. But if the trade is going against the Simon, if the trade is going deeper into the zone, then yes, I will take some additional layers. And then what I often do as well is when the trade moves back up even to entry point, sometimes I don't even get, if I've layered into the trade what's being given and I get 3 entries, if price does move back up even to the entry point, I will come out because I've got 20 pips on my first layer and I've got another 40 pips on my second layer or thereabouts. So I know that I'm still taking 60 pips and a break even, if that makes sense. So quite often I don't wait for TP1. If I've layered in, I don't wait for TP1 if I'm watching. Josh, would you close in a loss with first entries while layering? Would you close? I have done that occasionally, mate. So if overall, I'm looking at what the top number at the number at the top of the screen says in blue. If I can get all of my entries into the blue, fantastic. But ultimately, if the number at the top of the screen is in a number that I'm happy with, I will exit the trade anyway. Sometimes that might be only 30, 40 quid. My account size is just over 8 grand. So I'm happy to just pinch out the market, keep pinching. And if I can take 20 quid here, 50 quid there, 90 quid here, I will just keep pinching it like that. But ultimately, what I am looking for is the number. If I've got 3 trades open, I'm looking for the main number at the top of the screen, what's giving you the total profit or loss. I'm looking for that to be in a number that I'm happy with to exit the trade. But I won't re-enter, mate. I won't after I've layered in, I won't re-enter, bud, now. If I've layered in, I've layered in, that's it. And if price goes where I want it to go and I'm happy with the numbers, I'm out of the trade. And I don't, like I said, quite often, more often than not, in fact, if I'm being totally honest, I don't even wait for TP1. Especially if I've layered in. If I haven't had a chance to layer in and the price shoots up, then, I'll chase my stop loss up. That's the way I like to do it. But if it comes into the zone and I get a couple of layers, Then as price moves back up, I'm just waiting for a number that I'm happy with that kind of floats my boat, and then I'm out. And quite often that's not even TP1, especially if I've gone in with a couple of layers, because like I said, I'm going to get 20 pips from the first layer and I'm going to get another 40 pips from the second layer. So I know I'm coming out with at least 60 pips of profit. That's the way I look at it. And if I'm doing, between 50 and 100 quid per trade that I take, that's good enough for me. And again, that's just based on my own account size. So, um, has anybody got anything else, guys? What you want to just chuck in? We'll have another couple of minutes. But otherwise, is anybody new on here, by the way? If you're brand new and you've not actually joined yet, can you just put like a one in the chat, or just drop us a question, or let me know? Because if everybody on it is already trading, that's great anyway. And if you've got any questions, if you are already trading, things that you feel like you need help with, chuck it in now, because it might ask somebody else. It might help somebody else. No questions. I'm going to wrap it up then, guys. I'll wrap it up then. Hang on, Steve. Here we go. Steve don't understand the layering. Yeah, well, mate. I'll tell you what I'll do, pal. In fact, tomorrow, I should get on some trades tomorrow. I've got to drive over to Manchester in the morning, but what I'll do is I'll do some screen recordings tomorrow. So when any information comes in, I'll do some screen recordings and I'll do some voiceover talking of how I'm doing it, and that'll probably be useful, I would have thought. So yeah, no problem with that. But guys, if any of you ever need any help, honestly reach out, because there's no better feeling for me than when people are saying, I feel like I've cracked it, the penny's dropped, I've made this much. That's the best for me. And I also know that sometimes we can sit there, ego might not like asking for help. But ultimately, when we're talking about making money and making this a successful journey, drop the egos and let's fucking go. Um, I just do it on my phone, Simon. I do it on my phone, but what I will do is, like tomorrow, because I'm going to be sat in Manchester all day, I'll take my laptop and I'll have Trading View open. So I could, because I like to mark up the zones as well. And again, I'm still learning from Ish, who does the calls on a Tuesday and a Thursday night. So I like to implement some of his strategy, just practicing and mark up the zones. I'll quickly show you the chart I've got marked up now. Uh, so all these black lines are areas of interest where obviously the market's reacted somehow, or it's either been a support or a resistance. So again, and I'm still grasping the strategy, to be honest, and still learning about it. That's actually the 1 hour time frame. Yeah, so I like to mark up like this, and then occasionally I might look at taking some trades by myself as well. But if I do take trades by myself, I like to do it on a smaller lot size, just until I get fully confident with what I'm doing with it. Ultimately, mate, I'm happy to keep taking the instruction, because at an 85% strike rate, I'm more than happy to swing off their coattails. Right, lads. Yeah, so that's it. And guys, if you can get on Tuesday, we'll be having a coffee club. If you're in the Hull area, we will be having a coffee club. Let me just quickly check my diary. Um, yeah, we'll be having a coffee club on Hull Marina between 10 and 11, 12-ish on Tuesday, if anybody would like to come. Sometimes it's just handy to have somebody sat there with you while you've got your phone in your hand and just talking through it while you're doing it. Sometimes, obviously, over the computer and over the phone, it's not quite as effective for everybody. So if you are in the Hull area, we'll be at Thieving Harry's on Tuesday morning at 10 a.m. If you are based elsewhere and you want to let me know about maybe starting some of this yourself and inviting people, let me know, and we'll pump it through the community. See if there's anybody in your area. All right, folks, but have a great week. Stay disciplined, keep your heads, don't gamble, and let's have a decent week at it. Market's open tomorrow. I think it might be quite steady tomorrow, obviously, because it's bank holiday, but still there'll be some trades coming, I'm sure. So have a great week, everybody, and I'll see you all soon.